Welcome back to the 10K SOXL Trader Challenge Week 10 Summary, Day 41 to 45. This week's main theme remained recovery, tug-of-war. Market showed frequent pulse movements with weak continuation, prioritizing rhythm and risk control over directional judgment. Overall experienced small drawdown with risk controlled within budget. Weekly rhythm and trading performance. Trading principles. Position sizing based on available capital divided by entry price, rounded to whole shares, without leverage or margin, ignoring commissions and slippage. Strategy focus. Signal confirmation priority. Centered on quick in and out, small targets, controlled drawdowns. Returns and drawdown. Win rate neutral to low but profit loss ratio and stop loss execution were good, with weekly drawdown under control. Index and market recap. U.S. equity markets overall remained in cautious recovery, tug-of-war structure this week, with multiple news-driven pulses during the week. Index movements limited with no significant volume expansion. Market rebound lacked sustained resonance with futures basis, with significant seesaw effect between heavyweights and growth stocks. Semiconductors and growth. AI and upstream equipment chains' positive tone this week provided support, but internal high-low rotation was rapid. High elasticity instruments like SOXL showed large weekly amplitude, with high elasticity plus high pullback characteristics continuing, more biased toward structural and short wave opportunities. Interest rates and dollar. 10-year Treasury yield oscillated around the 4% level this week, dollar index oscillated weekly. Marginal changes in both still amplified effects on growth valuations and risk appetite but provided no unidirectional guidance. Weekly news flow, macro and policy, trade, export control and policy expectations intertwined, with market torn among growth, inflation, policy path. Weight oscillation between risk-off and rate cut expectations elevated intraday noise and pulse frequency. Industry and corporate. Foundry and some equipment chain guidance remained positive, providing periodic boost to chip and AI chain risk appetite. However, adverse developments in financial, regional banks appeared from time to time, suppressing index consistency and continuity. Market structure. Capital characterized by coexistence of dip testing plus high-level profit taking, with volatility in elevated to pullback transition range. Weekly pattern repeatedly demonstrated pulse, pullback, repair, rhythm. Weekly quantitative summary. Weekly trades. 9 trades. Win rate 44.44%. Weekly total gross P&L minus $56.53. Weekly return minus 0.53%. Average winning trade $143.15. Average losing trade $125.82. Average lost. Best single day. Day 42 plus $149.35. Plus 1.41%. Worst single day. Day 45 minus $202.54. Minus 1.88%. Largest single win. Plus $254.80. Day 42 trade 1. Plus 2.41%. Largest single loss. Minus $213.30. Day 45 trade 2. Minus 1.98%. Weekly closing thoughts. In recovery, tug-of-war cycles, rhythm and risk control are the primary productive forces. Persist with quick in and out, take profits when available, and spend risk on the most confident patterns. If this weekly summary is helpful to you, please like, bookmark, and share for support. Also welcome to share your intraday rhythm and risk control insights in the comments. Follow the account. We'll continue with live trading recaps in week 11.